me share the live stream. Help me hit the like button. If you've not subscribed to this, help me just hit the subscribe button. Okay, thank you so much. So, what is actually the concept behind the break and the retest? Nobody ever talks about it. What we are just used to, what we know is that we see a market moving in a sideways. We bring up our trend lines on the top and the above, wait for the breakout above or below. We see the price coming back to the breakout point, then we buy or we sell the market. Now, what is the concept behind it? I had to take my time to study the market, to study and read the interpretation of those candlesticks that we are using. See, let me give you an instance. If you want to go to a market, you will definitely see two participants in the market. You see the buyers, you see the sellers. Now, the seller has the goods. Why the buyer comes in to buy that goods. Now you can see for yourself that buyers and sellers are in the market. You can see it for yourself doing transaction. But in the forex market, right? In the forex market, the interpretation of the buyers and sellers is being represented with candlesticks. And that makes it very confusing. I don't even you get my point. That makes it very confusing. So I have taken my time to study the chart and I came up with something I want to give to you free of charge. So I want you to pay attention so that anytime you see the chart, anytime you look at the chart, beyond the candlesticks going up and coming down, you can now tell yourself, okay, this is what the market is actually doing. Because it doesn't really make sense seeing candles going up and down. We just draw some line, it in goes out, we say we want to retest, then we buy. What is the real definition? What is the real thing? What is the real thing? Because if I know the real thing, if I want to go to a local market now where I will meet the seller as a buyer that I am, what I will do is I am already used to that market and I know who I want to buy the item from. Does that make sense? Does that make sense? I know who I want to go and buy the item from. Even if I don't know the person I want to go and buy the item from, I know I will see a man. I know I will see a lady. I know I will see a woman holding pineapple, holding some apples. I know because it's the market I am used to. But in the forex market, it's different. We only see candlesticks moving up. It now gives us an impression that buyers are inside the market. So I took my time. I was under a mentorship to find out the reinterpretation, and I want to give it to you. Does that make sense? Good. Let's dive in deeper. All right, let's dive in deeper. Imagine that in this financial market, it's being controlled by a certain group of players. We just join to take opportunity, to take advantage of it, to trade as an agent to make money, right? We just joined. Please help me share the live button. I want more people to come and hear what I want to give out now. And to you, I want you to hold it like this. If I give it to you, you hold it like this. Go into the chat, look at the chart, and try to see it for yourself with the way I just gave it to you. Now, there's a place called the Wall Street where all these things go on. Imagine that you have a friend, you have an uncle, you have a brother, a sister, a father, a mother in that place who gives you a call and say, "Whoa, my brother, the market wants to go for a buy." Or rather, you are right there in Wall Street. Think about it for a moment. Think about it. What it simply means is that you would have a precision on if you're going to buy or you're going to sell. That's what I'm trying to talk to you about. You have a precision. Imagine that you are in Wall Street where the orders are flowing in for a buy, for a sell, and you just hear or you see the order for a buy. You will join the market to buy because you are confident about it, right? But that is a different thing right here, because they give us the interpretation of the buyers and sellers transaction in the form of a candlestick. So let me take it down. Let me show you how you need to see it with your eyes. Is that good? Let's go. Let's go. So watch this. Watch this. Watch this, guys. Watch this. Let me shift this away and just show you a white screen. So we are all already used to the ranging market. What is a ranging market? Where we see buyers and sellers agreeing on a particular price. What it simply means is that you can see buyers agreeing on a price, sellers selling to the buyers. The same thing happens when the buyer comes again. The seller sells at that price again. The buyer comes again. The seller sells at that price again. So, for example, at beneath here, let's say this is sold for like $100, right? And sorry, it's bought for $100, and at this point here, just like that. So it's just the same thing. Let's say at this point here is 200, right? So business is going fine. The buyers comes, they bought for 100. The sellers come, just like that, just like that, just like that, just like that, just like that. Sellers are they are agreeing on the same price. They are okay with the price. Now, how do you see the chart? I want to show you something now. How do you see the chart? It will now depend if the demand of that thing you want to buy is high. Think about it for a second. If I want to buy a Lamborghini, if I want to buy a Porsche, or rather, I want to buy a Ferrari, for example, now it will depend on the volume of the buyers at the Ferrari store to say, woo, we only have 5 Ferrari, but we have so many others coming in for the same Ferrari. Now, we want to see the demand. That will give them kind of like an impression to produce more. For example, if they have to produce more, but they want to know who they want to give it to. Now, see what I'm trying to explain to you. For example, now the demand comes in. At when the demand comes in, we don't jump into the market. So when you see something like this, the candlestick going like this, it gives you an impression to say, okay, there is a demand for Euro USD, or rather, there is a demand for Euro. Many people in different parts of the European nation or any other countries pegged with the Euro currencies, they need the Euro currency. That's the demand. When we see such demand, it tells you as a trader, you're not concerned about keeping the dollar, keeping the euro, keeping the BTC. You as a trader, you're not concerned about that. Your job is to come into the market, seek out for a deal, and trade the financial market. You make your profits that way. Is that clear? So when you see the market move higher this way, it tells you that, okay, the demand for euro, who has euro, sell for me. Who has euro, sell for me. Who has euro, sell for me. Now, that is where you come in as a trader. When you spot, just jump into it. There is a possibility that the market makers, the store owners, we want to give a discount. When that discount comes in, because there are much demand, when that discount comes in, they want to push the price. When that discount comes in, that becomes your point of interest. That becomes where you fill in your order. Okay, there was a time the market went higher. It tells me that people really are interested in this euro that I am trying to trade. People are interested in it. Then, if the market does not give you a discount and keeps going higher, it means probably you say you have missed that opportunity. No problem. Don't be angry about it. Let that one go. But as a business person that you are, you seek for a deal because you don't want to buy when it is high. You want to see that the price comes low for you to now buy. That's where the concept, the principle of the buy low, sell high came into the financial industry. So when the price is at this junction here, where it's $100, now the price is high, it still tells you, ooh, I can see how the market shoots up. The participants, the buyers are really interested in buying that market. It gives you an impression as an agent, as a trader, to say, okay, the price is 400. Now, if they give me a deal, a discount, I will join. Now, when you now see the deal comes into that $200 where the buyers and sellers were agreeing before now, what would you do? You strike to participate in the market, to trade the market. But then again, there are tendencies, there are possibility for the market to come in and try to give you the discount, but it fades away. When it fades away, it tells you that the initial people that pushed the market were not serious with the market, were not serious with the demand, rather. We're not serious. They gave up. It's just like people going into a store to say, I want to buy this human hair. Of course, let me put it in quotes because of my viewers all over the world. I don't know where the words is applicable. Let me use the word the bone straight hair that the women are interested in getting. So imagine when a woman walks into a store to say, I want to get a bone straight hair, and she just goes in there. Okay, let me not even use the bone straight hair right now. Let me use the Ferrari I was talking about. You go into the car store, you see a Ferrari you like, and you know you don't want to buy it, but you just came in there to make an inquiry, telling them that by next week you will come get it. But next week they waited for you and then they see. So you're not serious with that. So we can now call that a fake out. We cannot call that a fake out to deceive people that you want to buy, but whereas you're not interested in buying, right? The essence of what I am preaching to you, the essence of what I'm teaching you is for you to read meaning in what you are doing as a trader. Don't just see the market going up and down and say, ooh, it's time to buy. I want to go buy. Don't you see the market say it's going down? Ooh, it's time to sell. I want to sell. Read meaning to whatever you do. Read meaning. Read meaning to whatever you do. Does that make sense? I know it makes sense. So when the price comes to that $200, where buyers and sellers were agreeing at a particular time, you remember that time, right? Then you can now seek out for other conferences. You know, I'm making it simple this way. That's why I'm using the word other conference, because you want to be sure to say, okay, at the time the price was 200, right? I remember that time. I remember. And of course, $400 is high for you to buy. And when the sellers give you the deal for to buy it for 200, it's a good deal. It's a good business. So you try to buy it at that 200, but what do you do? You watching me right now. What do? You wait to see if buyers will really buy it. So at the point where you now see the strength of the buyers above a particular point, you say, okay, buyers want to buy this market. Then you join the market, and of course, you enjoy your trade. So you see, when the price goes above 400, maybe let's call this one 500. Remember, you once bought at 200, and now you got the at 500. So you see, you've made gain if you want to sell that product back. That's what I want you to see. That's how I want you to see this thing. From this day henceforth, I want you to read meaning in whatever you do. So as I summarize this, we have three states of the market I always talked about. We have the trending market, where it's can see the uptrend and the downtrend. We have the ranging market where you can see the market going in a sideways, right? You have the disrupt. My students, avoid the disrupting state of the market because it's violating breakup structures that you enter for a buy, market is selling, you enter for a sell, the market is buying. You do not want to. When you don't see a ranging market, you probably come into the market, you are seeing a trending market. Join to say, okay, I see price go higher, sellers gives a discount, and the market went higher than the price. You can now say, okay, I want to join right now. I want to join right now. Now that's a trending market. But make the ranging market your best friend, where you now wait for the break, the retest, then you follow to take the destination they are going to.